Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the money talk that shapes our world. And today we've got a little something brewing with CBL and Associates Propriated, and honestly it smells like a financial strategy refresh. Let's dive into what is technically a Form 8K, but to us it's a signal of what's happening under the hood. So what is this filing all about? Well, on the 5th of November of 2025, CBL and Associates Properties Incorporated announced something pretty significant, a new plan to buy back their own stock. This is a move that companies make for a variety of reasons, but it usually signals that management believes the company's stock is undervalued, meaning they're getting a good deal if they buy it back, and who are we to argue? With the folks running the show right. Now, CBL Properties, as they're commonly known, is a real estate investment trust. That means they own and operate income producing real estate, usually shopping malls in this case. So a stock repurchase program directly impacts their financial structure and can be a way to return value to shareholders. Looking at the details here, the company authorized a brand new common stock repurchase program. This isn't just a minor tweak. It actually replaces an existing program that was authorized back in May of 2025. So clearly they've been thinking about this for a while and decided to shake things up. The juicy part is the amount up to $25 million worth of their own common stock can be bought back. How will they do it? The filing says they can purchase shares from time to time on the open market through privately negotiated deals, or even other methods. They'll be watching market prices and other conditions to decide when and how to make these purchases. This new program is set to run through the 5th of November of 2026, so they've got a good chunk of time to execute this. Think about this in terms of a pie. If the company buys back some of its own shares, there are fewer slices of the pie available for everyone else. The remaining slices effectively become a larger percentage of the whole company. This can boost earnings per share because you are dividing the same earnings by a smaller number of outstanding shares. Often this can make the stock price more attractive to investors, which is likely a key goal here. This filing itself isn't a deep dive into their quarterly financials, but it does point to a press release that contains more information. That press release exhibit 99.1 is incorporated by reference, which means it's officially part of the report and gives us the public announcement of this stock repurchase plan, while we don't have the full financial tables right here. This action itself is a strategic financial maneuver. We can infer that they must have confidence in their future earnings potential and cash flow to commit to buying back millions in stock. They're essentially betting on themselves, which is always an interesting signal. The signature here, Benjamin W. Janicki, Executive Vice President, Chief Financial Officer, and Treasurer tells us who officially signed off on this report. It's a standard operating procedure, but it grounds the announcement in a real person responsible for the company's financial health. Now let's try to look beyond the PR and see what this stock buyback really means for CBL Properties. On the positive side, it shows that management believes the company's stock is a good investment at current price levels. This can create a floor for the stock price and potentially boost shareholder value if the buybacks are executed intelligently. It also signals a certain level of financial stability and confidence in their future cash flows. However, there are always risks. If the company overpays for its own stock or doesn't see the expected improvement in its business operations, this buyback program could be seen as a missed opportunity to invest in growth or pay down debt. For a real estate company like CBL Properties, especially one that operates in the retail sector, which has faced significant disruption from e-commerce. The key question is whether this buyback strategy is the best use of capital compared to investing in transforming their properties or adapting to changing consumer habits. We need to see how their actual financial performance pans out under this new strategy. Looking at their past performance and the retail real estate landscape in general, CBL Properties has faced challenges. A stock repurchase might be a way to support the stock price while they navigate these headwinds. The real test will be whether this buyback is part of a larger successful strategy to revitalize their business or just a way to temporarily prop up the stock. Without seeing their actual financial statements for this period, it is hard to say definitively. But this repurchase authorization is a clear indication of their current strategic focus. So, in conclusion, CBL Properties is making a move to buy back up to $25 million of its stock. This suggests management confidence and a focus on shareholder returns. The big question remains how this fits into their long-term strategy for navigating the evolving retail real estate market. We'll be watching closely. Alright, that is our breakdown of this CBL and Associates Propriated filing. What is your take on this stock repurchase plan, and what do you think it signifies for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord community linked in the description for more discussions. Thanks for watching. See you next time.